Hello everyone, how's it going? So in this video, we're going to talk about MMTLP, which is the spin-off from MetaMaterials and currently had the S1 approval. Over the past few days, the price action has been absolutely nuts, with the stock probably one of the plays of the year, if not the play of the year. So it certainly attracted a lot of attention from traders, mostly because the volatilities of the share price and the strong fundamentals that this company, suggests. And also, of course, because of the shorts that are still not redeemed. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. Before we begin the video, I'd just like to state a brief disclaimer. My video has my opinions and my interpretation on things. They're certainly not investment advice, and they should be watched for entertainment purposes only. They may be able to help you to make better educated decisions, but they shouldn't be used as the sole material for decision making. And also, usually we try to do deeper dives than just the latest news or the price actions, but in this case, of course, MMTLP is probably gonna stop trading in just a few days, so there is no long-term future. And also, my analysis is done usually right before the video is uploaded, or sometimes up to a few days before the uploading date. So sometimes the price charts no longer reflect what you see in the video, but the past sometimes suggests or at least gives hints about what the future has for us. So with that being said, let's begin with today's topic. Recently, it was announced that MMTLP will go through a merger and that it has been approved. So, on paper, every single star has been aligned for MMTLP to go to the moon. Now, for a while, it has. I mean, the stock jumped from $2 all the way to 10 or almost 11 before falling back to the current $8. Now, I've said previously that, first of all, the fact that it has jumped 5-fold is already kind of impressive. Few stocks in 2022 has been able to achieve this, and achieve this in such a dramatic way. Now, this is mainly caused by the expectation that the shorts will have to redeem themselves. So far, they haven't, and if anything, they have even piled in. So, we currently don't know what's going to happen once the stock stops trading. The current consensus is that, well, you know what? It's not gonna go well for those who have the short positions. They will have to redeem somehow. And does it mean that the squeeze is just going to be delayed and more intense? This is possible. But I have to say that for those who have a huge exposure in MMTLP, I would recommend to control this exposure if you have let's say 50% of your portfolio in this stock. Because here's the thing, regardless of what's going to happen, it's never a smart move to put all these eggs in one basket. Because you never know what's going to happen with this basket, given that it's not your hand holding it, right? It's the market's hand holding it. And if it decides to smash this basket on the ground, then it's your loss. The market doesn't really care. So with that being said, for those of us who don't have an exposure and who have a very low exposure, those pullbacks are actually good news for MMTLP. It just means that we can have a cheaper entry point, if entry point there is. Now, the play is actually very simple. It's a short squeeze, or a suggested short squeeze, that is heavily hinted by the fact that there's a huge amount of shorts, and the fact that as long as those shorts are open, they have to pay financial fees, so the longer it drags on, the less favorable it is for the shorts. Now, this is a double-edged sword. On one hand, if they redeem to avoid further losses, well, they're going to be able to push the stock up further, which benefits those who are long the stock. On the other hand, this may also drive them to more desperate measures, such as piling in additional short shares on MMTLP to push it lower before they redeem. If that is the case, I would say that it's a pretty uphill battle for those who short MMTLP. But at the same time, is it ever surprising to see people doing this kind of stuff? Sometimes we think that institutions are smarter than individual, like that they are smarter than retail traders, but that's often not the case, right? That's often not the case, and like they would sometimes try to like bully their way into things or through things, and sometimes we also see like hedge funds going out of business or investment funds going out of business because they have put way too many eggs on one single position. For example, we have previously seen Melvin going out of business or requiring, aid from Citadel because they've put in a lot of money into like shorts to GameStop. We know how this went for the stock. And there are also like companies like Archegos who have, put in way too much money into specific positions, and that ultimately caused the fund to collapse. So we know that this kind of stuff happens. And it is possible that institutions decided to maybe do a last wave before the redemption. So in this case, if what I've just said here is true, then it's only a matter of time before a massive short squeeze is going to happen. If that happens, then it's going to be payday for people who still own the MMTLP shares. Now, and this is like my personal opinion here, and it's not necessarily backed by anything that happened before in the stock market, but it's also something that I think is possible to occur. Let me explain. I remember some shorts with, just like MMTLP, a lot of stars are aligned, people are waiting for things to happen, and yet they just don't happen. Or the shorts somehow find a whole bunch of like synthetic shares from like obscure rules or little corners, little known like jurisprudence or whatever, and they somehow manage to go through it. Now, if that is the case, then I would say that, okay, one, it doesn't mean the end of the world for people who are long MMTLP. It just means that they may now have to go through potential like legal procedures in order to get things right. Okay, we have seen from time to time this kind of discussion emerging on subreddits, but does it mean that it's going to work? Well, I'm pretty sure that it has worked before, so it doesn't really mean that this is going to be the end, but it's going to be more complicated than we might like to think. I don't necessarily have an example to give to you, but two things. One is what happened to SPRT. I remember the company simply changed the name and merged with something else, and then just like all the options that were in the money are suddenly worthless. The other one was NEO. I have said very early on that NEO might be delisted and listed somewhere else. Doesn't mean that it's going to be the end for the company. Not necessarily. It's not a given that a company absolutely needs like a very high market cap if it can self-sustain its operations. At some point, it's just something that's going to benefit people who scalp those shares at the time. So my point is, at the time, most people were not convinced that this is going to happen, because why would things go to, reach that point? I think we were in 2020 at the time, and I've made a video. I'm not sure if it's still on, but basically at the time it was my warning to traders who were very optimistic about NEO, saying that, you know what, there is a real possibility that this stock can get delisted, because at the end of the day, our money, your money, my money, and some institutions' money, it doesn't really matter in the grand scheme of things. It doesn't really matter to people who can print money and who, for other reasons, might decide to like create troubles for ADRs, VIEs, and so on that are listed in the US. We're now 2 years down this road, and to say the least, things have changed. The environment is now different. So my point is, even if the two examples that I've just given you are not specifically to like short squeezes gone wrong, it's nevertheless a warning regarding like what the stock market can do to a stock to sometimes avoid like huge losses for people that they want to cover. Now, is it fair? No, it's not. It's certainly not fair, but the world never has been fair. And it's especially not fair for the small shareholders. Oh yeah, while we're at it, another one. Remember CCIV? So the SPAC that Lucid Motors went public with. So CCIV was trading at one point at around like $50 to $60 because people think that Lucid is going to be amazing, and CCIV or later LCID is going to go above $100 because it's the next Tesla. Well, guess what? Something happened last minute between the private shareholders and CCIV, and basically sucked out a lot of the value that investors were hoping to realize. And as a result, I think the stock went from like $50 or something all the way back to like in the $10 level. So basically you should be aware that there could be surprises, very bad surprises with stocks, that it's not because we only think that the only way to go forward is a short squeeze, and a massive one at that this is necessarily going to happen at 100% of the probability. So this is why, I would say that this message is mostly for people who are very exposed to MMTLP. If you have like a position below 1%, then to be honest, it doesn't necessarily matter. Okay, even if you lose, 0.5 of your portfolio, this is not going to tip off the balance of your portfolio. But if you're like 30% in MMTLP, that's not the smartest move ever. Now, where can MMTLP fall to? I would say that as long as it can maintain itself maybe above $6, it's still a bullish trend. But with that being said, if the stock is due to stop trading in a few days, then maybe the time is also ticking for us. So at the end of the day, this is mostly like a game of who has more nerves, right? Or who is more willing to bet on a favorable outcome for everyone. So with that being said, my recommendation is to buy if your exposure is still below 1%, and to keep buying all the way down to $6 as long as it doesn't go above your allocation or projected allocation. Now, of course, my recommended exposure is between 0.5 to 1% of your portfolio, because this is still a small stock, and I would say that it's not because there's a lot of promise that you should go all in anything. And it's the same thing for this one. So 0.5 to 1% is my recommendation.